Jim Cramer just warned that Monday could be like 1989's Black Monday. And I gotta say, the charts are kind of similar. Take a listen to literally this 14-second long clip.
The president doesn't try to reach out and reward these countries and companies that play by the rules in the 1987 scenario, the one where we went down 3 days and then down 22% on Monday, has the most cogency. We will not have to wait out too long, will we? We'll know by Monday.
Seems pretty simple to me. And I mean, from what I'm seeing, you don't really have any positive headlines over this weekend on trade. Nothing that is substantial. Now, of course, when Jim Cramer says something, markets tend to do the opposite. Okay? But we do have a big problem here. Apparently, hedge funds are facing Lehman-style margin calls due to the market crash triggered by President Donald Trump's tariffs, according to the Daily Mail. Many now fear a repeat of the devastating Black Monday from October 19th, 1987, when the Dow Jones Industrial Average plummeted by 22.6%, the largest one-day percentage drop in history. I mean, these guys are clearly not watching the channel. Like, it's scary that they manage people's money. I've been saying to get out of margin for weeks now. But apparently, they're still in margin? Doesn't make a whole lot of sense to me. And they're getting these margin calls. That is a very slippery slope. Now look at the chart from 1987 and the Black Monday event and where we are today. They do look kind of eerily similar to a certain extent, especially these two candles here. Almost identical if we have a really big drawdown coming tomorrow. And there's a lot of people talking about that. Now, there's also a lot of people talking about this. This is a chart from Bespoke that says red dots on the chart are the 3 prior times we've had 2-day declines of negative 10% or more. Okay, we just fell like 5% on Thursday, and then we fell almost 6% on Friday. So you're down like 11% in 2 days. It almost never happens. And every time it happens, historically, it's a bottom, right? Why? Okay, context is key here. Normally, if the markets sell off 10% in 2 days, it's because someone caved. Usually the Fed that says, okay, we're done playing games. We're going to cut rates. We're going to bail you out. Like, at that point, usually shit has hit the fan. Can we agree on that? Usually it's turning points, right? Whether you're thinking of COVID or you're thinking of 0809 or, the Black Monday event, right? That's a pivot point. This time around, Jerome Powell doesn't seem to want to pivot. Trump really has no plans in pivoting from what I can tell. Nobody's panicking yet. That's why a Black Monday scenario could happen. There's an old saying on Wall Street that goes like this. When policymakers start panicking, Wall Street will stop panicking. And that sums this chart up. Until Jerome Powell panics and Trump panics, Wall Street's not going to stop panicking. It's like a really expensive game of chicken right now. People are trying to get, or Wall Street's really trying to get Trump to cave, because these tariffs, it wasn't even like he pulled out the bazooka, economically speaking. He dropped the A-bomb, economically speaking, on this economy. I mean, we all know the Smoot-Hawley Tariff Act of 1930, regarded as the worst piece of legislation ever passed in the Senate. Well, this is 3 to 4 times worse than that. or more extreme than that. And back then, only 3% of our GDP was global trade. Today, it's 13%. I mean, this is what some people would say a depression kind of catalyst or shock to the economy. Even if theoretically all companies tried to do contract manufacturing in the US that is doing it in Vietnam or China, these other countries, there is not enough capacity in the US. I mean, I don't know what the percentage would be if 50% of companies would just be screwed, or if, 80% would be screwed. Hard to tell you those exact numbers. But it's they nuke the economy, right? And as I shared with you in yesterday's video from Morgan Housel, I really urge you guys to watch this book or read this book. There's a lot of fascinating things in this book. One of which I'll just point out, by the way, is we all know Warren Buffett. We know Charlie Munger, but there was another guy that was a part of that group, but he used margin and he leveraged at the wrong times and essentially lost all of his money. Okay, not to get into that story too much, but that's why you don't want to be in margin right now. Nonetheless, The Psychology of Money. It's like 200 pages. Read it if you have not. Okay, should take 2 days if you're a good reader. He wrote on X, the author of this book. He says, spoke to an investor who said if the market actually processes what happened yesterday, it would be down 30 to 40%. The fact that it is not is either denial or a belief that it will soon be reversed. That's true, right? People think that it's going to be reversed. And as of now, there's no signs of that. So Black Monday is a possible event. Now, a couple things you guys need to know about a Black Monday style of event. The Fed will cave. They'll have to. Okay? If the markets are down 10, 15% tomorrow, I don't know about 20%. That's a little extreme. The Fed's going to have to cave. Okay? Because at that point, if they don't, you could be at the point of no coming back from, right? The point of no return. The Fed will probably come out tomorrow night and cut rates and just accept whatever inflation pressure that they are faced with. That's number one. So if you're down 10, 15% tomorrow, it probably makes sense to buy quite a bit, okay? Although we still have that recession risk, but if the Fed were to come out and dramatically lower rates, then that risk does fall as well. So that's number one. Number two, it's important to remember that we don't know if we're going to have a Black Monday kind of event, but the stage is set. I will agree with Jim Cramer there. There's no progress on the whole, tariff negotiations, if that's even what it is. Trump basically said it's not a negotiation. Powell's not freaking out. Hedge funds are getting margin called. The reality of this situation is a lot worse than the markets are even pricing in by far. The setup is there, but it's not a guarantee that it happens. And number three, if you guys have never lived through a circuit breaker, then you started investing after 2020. Good news is I have, and I'll explain how it works. So when indexes fall 7%, they get halted for 15 minutes. Fine. Once they fall 10%, they get halted for another 15 minutes. Maybe it's 11%. Doesn't. Thematics of it does not matter. It's 10, 11% around there. If it falls 20%, then you close for the day. So keep that in mind. If we are somehow down like 18% or something, the markets could close tomorrow. That would be kind of hard to see in my view. I mean, 20% down would put you to like 400 on the SPY. That would be crazy. I mean, that would actually put you back to like the midpoint of your trading range in 2022 for the most part. I feel like you'd want to do quite a bit of shopping in that event because by Tuesday, I think rates are probably going to be down at least 1% or 2%. One of the big failures the Fed made with the Smoot-Hawley Tariff Act was they didn't accommodate enough. Now, the Federal Reserve was a lot different in 1930s than it is today, but the Fed would rather have slightly higher inflation and a better economy, right? If the stock market sells off like that, you've never not had a recession. You've never not had a deep recession at that. It's something the Fed will be forced to respond to with emergency rate cuts. Okay. And maybe it doesn't happen tomorrow. Maybe things are just fine. But people talking about Black Monday in and of itself kind of raises the odds of a Black Monday event. And the markets, they want Trump to cave. They want Powell to cave. And there's a bit of a buyer's strike going on right now. That's why Thursday was such a red day. That's why Friday was such a red day. Nobody wants to get ahead of the, nuking of the economy. People don't know where earnings are going to be. They don't know what's going to happen, right? How do you invest with that degree of, I don't know. You really can't. Okay, so we do have a couple of headlines coming out. This one says hedge funds have been hit with largest margin calls since 2020 and the COVID crisis. Now, this one is from Financial Times. Now, the European Union agrees on a first set of countermeasures targeting $28 billion worth of U.S. imports. So, yeah, they're retaliating to some degree. But look at this news. India is attempting to negotiate a bilateral trade deal with the U.S. to bring down tariffs. That could be positive, but again, I don't know if that's enough to save this market or whatever could happen tomorrow. Now, Scott Besson says over 50 countries approached admin on lowering tariffs. That's also a really positive sounding headline. And you can see here some news being reiterated from Friday. Vietnam has sent President Trump a letter offering to remove all tariffs on U.S. imports after Trump imposed a 46% tariff on the country, per Bloomberg. Bear Market Ramp Capital on X says, good morning. One more day until Black Monday. Besson says tariffs do not risk a recession. I don't know what dude, you really can't make this up. Okay. I don't know if they're just going to try to blame the recession on Biden, right? Is that what they're doing here? I'm so lost. That or they're smoking something. Respectfully. Inverse Kramer on X says Black Monday or bounce. Call it. And yeah, there's a lot of people that say Black Monday. One user on X says pretty chill day, I'd assume. Probably negative 4% or so, unless there's any news regarding the tariffs from Trump before then. Now we think 4% down is a chill day. And another comment here on this post says, unless Trump announces a major policy reversal on Sunday, it will make Black Monday look like a walk in the park. He likely will, though. He knows he's wrong in all of this, and he knows Congress will likely remove him from office if he doesn't. I mean, honestly, that is a real risk. If we were to have some kind of Black Monday crash and therefore likely already be in a recession, you do face the risk of your supporters turning against you. I think that is a good point. I mean, your supporters, Trump supporters, they're not just going to turn on him for no reason. But if they start losing their jobs, that would be a problem. And again, mark my words, if we have a Black Monday style crash, even something like Friday again, you're going to see the Fed react to that, especially like 10% plus down. The Fed's going to have no choice but to come out and accommodate markets. There's no choice at that point, because I'll bet your ass on it, Jerome Powell does not want his legacy to be one of this. You fought so hard to keep the economy out of a recession, to keep inflation making progress coming down, and then Trump gets into office, does a tariff act, and they didn't see the similarities from the Depression, and were just too late, sat on their hands, didn't do anything about it. People lost their jobs, and we had a deep recession. That's not what Powell wants his legacy to be. You also need to remember that as markets come down, as consumers pull back, you're not going to have inflation. Inflation's not going to occur when people are losing jobs. It just doesn't happen. Companies will have to just take it in the margin and let it be that. And then the question is, what do earnings look like on the S&P? And that's where things could theoretically get nasty. Now, in the news for Tesla, Michael Golofoy, Tesla's director of cell manufacturing, confirmed that their 4680 cell recently became Tesla's lowest cost battery per kilowatt hour, a major milestone. They say, quote, "And we aren't done yet. 2025 will have more big milestones with fully ramped dry battery electrode manufacturing to deliver even more cost efficiency." And we could see Lars on X. He said, "Let's make Teslas better. What do you all want for 2026? This individual said, "How about Grok on the cars?" And Grok responded and said, "On my way." And worth noting, this was not an automated reply from Grok. This was somebody on the Grok account that said this. Jaguar Land Rover has announced it will pause all shipments to the U.S. as it works to address the new trading terms after tariffs were imposed earlier this week. And the Tesla Europe and Middle East X account posted this video and says, "FSD supervised in Europe pending regulatory approval." Elon Musk said he hopes for a, quote, zero tariff system between the US and Europe that would effectively create a free trade zone. He told attendees of a league event in Italy. Tesla China has posted some pics on Weibo of the new stealth gray Model Y. Tesla has started canceling launch series Model Y orders in North America as that trim is no longer in production. I mean, the launch series is even more expensive, of a trim than the ones that they're starting to produce now. That's a good sign for demand, that if Tesla's willing to cancel these orders, that they have a lot of demand. Now, order holders are being encouraged to switch to the new non-launch series released yesterday. Only way to get a launch series now is via any existing inventory. Nissan is considering shifting some domestic production of US-bound vehicles to the US. Now, option activity on Friday was more positive than negative. You had a positive order value of 55% with 534 different trades totaling $362.2 million on Friday. So it actually didn't look too bad, even though Tesla was down like 11-ish% on Friday. Now, short sellers have also been amassing a large short position, currently sitting at about 3% short interest of free float and about $22 billion currently sold short. On Friday, short sellers covered about 500,000 shares that were sold short in Tesla. So from that perspective, they're trying to de-risk, right? They're getting ready for a bounce in Tesla potentially. And I think if we don't have a Black Monday event, we should have a bounce tomorrow, right? It's either Black Monday, really bad day again, or we should see a bounce, right? Because of how oversold markets are. Markets are more oversold than any time in 2022 and getting pretty close to oversold conditions of the crash of 2020, right? So being oversold doesn't necessarily guarantee that you're going to bounce the next day, but it raises those odds. Okay. So we'll see. Obviously, when there's margin calls, wonky things can happen, right? When people are getting liquidated, like, does the RSI really matter on the S&P? Probably not. And apparently people are getting liquidated right now. Now, for Tesla, if there were to be some kind of Black Monday event, Tesla could fall 30%. Okay, tomorrow. Like, that would be in the cards if it's truly like a Black Monday. That could put Tesla in the 160s. Okay. Again, you would want to buy that, I would think. At least some. Because, again, the Fed is going to pivot and start really cutting rates at that point. But, again, we don't know what's going to happen. So keep that in mind. Come to your own conclusions on all of this. Let me know your thoughts down below in the comment section. Have a fantastic rest of your day, and I will see you in the next one.